Okay, good morning, guys. Sorry I'm a bit late today. Funny enough, I had a few car issues, so rushed to get the kids to school. Had to be checking it, so all good now, but yeah, a bit of a pain. So let me know if you can hear me loud and clear, and we'll get up and running. The market's what's happening on the SPY? Gapped up. Oh, actually, we'll take a look at that in a minute. Is that okay? Bit of an echo. Oh, it could be. I have my head in the office, which is it's got a bit of a surround thing. Every time I lean forward, it probably echoes a bit. I'll keep my head back. All right, let's go. So good day for the bulls today. You would expect the index to open up about 45 points or thereabouts. So we'll see if that can flow on into the close. I think that's the important thing, how we close. You know, obviously we're going to get the bulls come out to play um, on the open. People will be chasing bits and pieces. Gold's probably going to struggle a bit today. Obviously, you'd think, being a overly extended sector, gold down overnight. It's down on a support zone. Well, not really, actually. It's broken through a support zone and bounced back. So we're going to see if they can, if it holds a lower high, it could be more weakness to come. But if it can sort of bounce around and chop around that zone, it could be a sign that some strength coming or buys continue to come back in. I just saw you. Picture of the coffee cup looking over the beach indicates a good day. Hopefully it does, but we'll see. I think it's obviously going to be a good day on the open. We'll just have to see if they can continue on, if they can hold the gains into the close, which would be the most important thing. Now, let's go where the markets are. There's a couple of things I just want to touch on. This is what we drew up yesterday. Forget about this one because it didn't happen. Um, but I think this is what we're looking for. It didn't pull back as deep, which just remember when it doesn't pull back as deep, it's quite a good sign of strength or strength to come. Not longer term strength, but it's just a good sign that that legs hasn't finished and it's going to take out some resistance. But this pattern played out on the Dow anyway, and I wanted to touch on that because I think it's quite important. I think there's a setup that I like to see, um, which I think is a very high probability setup. And if you see it, it's long or short, but if you see it, generally they happen long because it's a bit more, especially on stocks, it's a bit, look, when things go down, they tend to go down a lot faster and harder. And there's, you've got sort of a different style of trading on the downside than there is on the upside, especially on shares, because shares, especially when you get to the mid to top, they don't come crashing down as hard. They can, obviously, but they're always biased up. The whole index is biased up generally. Whereas you can see a lot in the futures and indices and FX commodities can play out because they're not tend to be biased just up or just down. It's sort of an each way bet which way they go. I hope that makes sense anyway. But I'll draw the setup and what the context is. So we're looking at, say, a trend up. We'll just focus on that because you're probably more than likely, if you're trading shares, you'll see it pop up. So this is a trend up. And what we have is our anchors. All right. As soon as it breaks through the top, the high here, anchor moves up. So that's the idea. You're trying to follow the trend. If you get into a pullback and you're looking for the zone to buy in here, or if you just buy on the break, this is a daily trend or whatever. If it's a weekly trend, you tend to get these daily moves down, but it's just all in context of one pullback on the weekly. You can look for the entry on the daily, looking for that weekly to anticipate that breakout of the high, the most recent high, and then you're basically going to move your stop to below the high low on the weekly, or if you can trade it up on the daily. So depending on what the process is, let's just take a step back. So this is what we're looking for. Okay, it's moved up. Now, a lot of the times the market can squeeze down, but because this was what the action might be on the daily, but the weekly is the context. So we're looking for a zone potentially to buy into on the weekly, but we're looking for that daily setup. Now, a lot of the times the dailies can do this type of action. It can pop up. It might look like it's going to, so you get to this sort of stage, you don't know which way it's going to go because you can't guarantee just because it's two legs down, it's down the anchor. You don't know whether it's going to, just draw them a different color, whether we're going to get this type of action, just straight down to the anchor or break the anchor, or whether it's going to just head higher from here and continue on up. But what I find is that I love seeing this type of setup is if the market sort of pulls back, and we've talked about this, it's a high low, but we call it like an inside high low, inside the context of this overall move. So it's starting to leg up, you get this minor pullback and then pop. And what that does is allow you to, rather than just pop up, if it just pops up there, you potentially could take an entry on the break of this high, but your stop's way down here. When you get these higher lows forming, these only a minor level, what it does two things. I think it's a high probability buy setup or entry setup, very high probability setup for continuation of this trend up, this longer term trend up, and it enables you to minimize the risk quite a bit, usually a significant minimize of the risk. So that's the idea. And what we did see, this is what I'm always drawing, that sort of thing. I love that sort of setup. You know, you got the overall context is up. If we can draw, what I'll take is a snapshot. I'll try to maximize that. I thought it's worth talking about while we just wait to see what the market does. If you can see what I'm talking about, it's only ever so slightly minor. We're on an hourly chart. Let's click down to a 30-minute chart. Let's just see if we can get that context better. Yep, maybe it is on a half an hour chart. I think it's on a half an hour chart. All right, let's forget about that. All right, so, and you've got to take it into context. So this is, to me, is a cracking setup. Let's just delete all that out. We don't need that anymore. What I'm looking at is basically this. So you've got essentially, this is a major leg up. Then you have a major correction, okay? And that, because it's washed out, you've got some lower highs coming to play. So you're sort of looking at that as a major correction. So that's your secondary or your pullback on the longer term. So whether this might be a daily move we're looking at or weekly, whatever it is, but it's a time frame up, if that makes sense. Then you've got the start, we've got this push up. Now we've come straight into a resistance zone. So yesterday we were talking about this, what's going to happen. We don't know if it's going to pull back from there, fall over through 25.7, or whether it's just going to pop up. But one thing to look at is if, okay, it backs off from that high, which you tend to expect that a lot. When it powers up into a resistance zone, you tend to expect some sort of reaction, whether it's profit taking, it's starting to build, there's buyers, buyers stepping in on a pullback and looking to support it. You just don't know what's going to happen. And even at this stage, when you started to get a bit of a grind up, that could easily have been a lower high here, breaks through the low, away we go. And then that double top comes into play. You've got your lower high coming into play, and then down we go. Instead, we've got a really cracking setup, and I'll draw it up, and it's that higher low, that inside higher low. So as soon as you get that, you get this sort of pop up. It's a pullback. Okay, at that stage, we don't know what's going to happen. If you just had an entry, for example, above that high, you've got your stop here. You're not taking much risk at all. It's a very small risk, and the idea is that this is going to be biased up. It's not a deep correction. It's starting. You got this initial pop up. So ideally, if you're going to get a lower high, you want a deeper correction, and then potentially that sort of action. A bit of a grind up, and then boom, you get that secondary leg down. Now we didn't get that. We've got sort of more of a controlled move down. As of this leg up, it's probably about 30% pullback if you're lucky, and then it started rallying again. All right. So what if you were looking at this, and I wasn't trading it at all, but I saw it this morning and thought that's a cracking setup. So that then, if you saw this type of thing play out, you thought, well, if I take an entry there, I've got small risk. My thesis is going to blow through there because there's going to be a bucket load of stops above that high. You're going to have stops from this little sell, selling leg coming in. Anyone who's potentially entered it here, they might have entered it, anywhere short here. They're going to have buy stops somewhere. Someone that might have wrote it down here short, come back up. They didn't get stopped out. It's come back down. They might have added. You got new entries. Even on this little pop up here, this red candle, you got some more entries short. People are trying to anticipate. They're not getting the price action yet. They haven't got the setup, but they're anticipating. And you'd be surprised how many people actually do that. Will anticipate, this is a high, I'm just going to go short. Where I think that's a lot higher probability if you took a short through that break of that low with your stop just above this high, then okay, this could play out easily, and then you've got a target down towards 25.7. But instead, you can see by this price action here, you're looking at 1, 2, you're essentially looking to measure that leg up and that leg up, which takes you basically into resistance zone. So that would have been your target, and you can see that entry or that that setup is very low. It's high probability setup, I'd say, and a very low risk on that. Does that make sense, guys? Is this making sense what I'm saying? But that sort of squeeze and the pop up through the high after this red candle, you get a bit of rejection. If you can see that next candle, it's tried to go, even though it's green, got rejected. Next candle slightly higher. It's a very straightforward, even though it's pushed down, taken out that level, taken out that red candle. So it's essentially a very minor leg like that, and then boom, up we go. Does that make sense? So we've got this setup in reverse of what we saw, but on it's a very small scale, but it's a definite trade. Does that make sense? But if you can see this sort of thing play out, and it's in context of the bigger leg, if we draw that in a different color, so this is the overall leg we're looking at. That's what we're looking at. So at this stage, we're looking for this leg to play out, and we want to try to catch something of that, especially knowing that there's going to be stops piling above there. That's going to be all, they've all got to buy to get out, and they're going to be bailing. And there's not only stops to get out, there's going to be stops to get in. There's going to be entry stops all up there. So you know what you're trying to do with this setup or this type of setup is to front run some sort of level or something like that you know that there's going to be people loaded in. And you know that if you can front run it on a high probability setup, even if you're wrong, you've got bugger all risk on it. You're not taking too much of a risk, and that's pretty much trading for everyone. I feel should be about risk. It's risk management first and foremost. It's not trying to be right. It's not trying to be, trying to be a legend trader. It's about risk management. And if you can manage the risk on any one trade, on something that you've looked at time and time again, and you've studied time and time again, I'll give you, for instance, this is what I do on the SPY. I've been just doing the last probably few days. Oops, no. And this is what I do on a daily basis. This was yesterday's. So this is what I'll break down. I'll see the SPY. I didn't take that short. I didn't trade that. I don't know what I was thinking there, really, to be honest. This is probably getting a bit too late. This could have been a buy signal, an extended market. The 30-minute trend is up. And I'll generally write notes on it and where I took the trade. I didn't take a short there because I was actually going to short it here. It didn't play out and it popped up again. So then I thought, well, this could just keep going. I'd rather just not short it before it breaks a key. And this has got to do with the anchor levels. See, this is the anchor level. This is the anchor level. So as it's going up, I don't want to short it here into an anchor because it could easily turn around and do the same thing it did here. It did here. Get a lower high, which came into play. Short it through there. Took it off pretty quickly. Actually, I bought it in here, didn't I? I bought it in here. I could have made a few points. Didn't like it. Took it off at pretty much break even. I was down slightly, half a point or a point, and then made it back plus a few more on that move down, about 10 points down. But that was the thesis. So every day, what I would do, if I traded or don't, what I'd like to do is just take a snapshot, put in some notes. So what I'm doing is training my brain to see setups, training my brain to see structure, training my brain. Yeah, exactly, Paul. Look, this is essentially a double bottom. If you're looking at this chart, double bottom here, higher low coming into play. You could have traded it off here. That's what you're doing is trading off a double bottom. Essentially, the 30-minute chart is actually up, and this is a 5-minute chart. So I'm looking at the 30-minute time frame of the bias is up. I want to try to stick to buying side of it on a pullback, a decent pullback, and I want the structure to play out on the 5. So potentially this was actually a buy setup, which I was actually short. So it's pretty hard to double up and go long. But yeah, you could board it in here, even board it in here. I didn't trade that. I don't like too much doing other things sort of in the tail end of the day, tail end of the session. But what I think is a good idea, it's not so much, if you're a pure fundamentalist, it doesn't really matter. But if you're trying to get into your technicals and you're trying to get your mind set on your technical trading, so I trade differently off a 5-minute chart for intraday than I would say on a share trading, which probably a lot of you would know. But I think the idea is to try to, even take a snapshot. If you see this type of thing, I'll go, look, I'll piece this together. This is a trade. I'll piece it together. This is the thesis. Write your notes. Circle the entry, a prime entry. And so the more you do that, the more you're training yourself to see it. And the more you train yourself to see it, the higher likelihood that you're going to see it early. And you're going to see that setup because you go, God, I've drawn that so many times. I've taken a snapshot of that so many times. It's stuck in my head. What if it plays out like that? Okay, the thesis is it's going up there. I'm going to take a buy and stop. If you're looking at that there, buy and stop. Stops below, not risking much, see what happens. I know that there's pretty good stops. If they get triggered, this thing could go all the way up. And lo and behold, it did. So that's, I feel, is probably a good way just to train your brain and to get in the habit of seeing some good trades. with low risk, and I think that's a prime entry. Now, that was a bit of a yabber on. Went for 16 minutes, so we haven't done too much. Let's just look at, see, quickly go over the Dow. The Dow's up in a key zone. We can see up here, cancel that, that 26.4, and you can see that's right up there now. It'd be interesting to see what happens tonight, whether it can pull back, hold a higher low, and then bust straight through, pretty much like we did at 26.044. If we can do the same sort of thing, consolidate this level, and then bust through, I think it's kind of a lower probability, purely because we got this sort of thing playing out, and we're right up there now. That to me is an extension straight up to that high. I would expect something. I don't maybe we get that. I just expect some sort of deeper correction off that level. Prior, I just don't think this has got the oomph to go up, pull back, and just go straight up and then head up to these highs at 27.2. I just think that there's too much China into Hong Kong. Yeah, so there's a few risky things that could cap this market. So it'd be interesting to see how it plays out. Look, could be completely wrong. You just never know. I mean, China are talking up solving the trade war. Obviously, Trump's going to be talking that. He loves it. So if anyone saw that article I posted on the forum about Trump lying about the phone call and China correctly said, no, it didn't happen. He's admittedly they're just trying to buoy the market, and he's trying to buoy it with, lack of a better word, bullshit. He's just fake news. He talks about fake news, and he's the first one to do it. So interesting. Anyway, they want the market high, and he seems to be doing whatever he wants, whatever he is needed to get it up there. But sooner or later, people will just go, no, it's probably rubbish. Let's sell off. And they're coming into a zone where potentially it could be a sell-off. So keep an eye on that tonight. We might wash it out coming into the European US session, wash it out, pop through it, and then just cave in. So just be wary. Employment data's out next week, so you've still got a week of where it could chop around here. But you might get anyone that's bought it through here, bought it off here, off this support, looking to take some gains off the table. But we'll see. You've got most markets are sort of at that same level. This is the S&P. What S&P's come into that same zone. It's a little bit off it now, but that's could easily, and if you look at that, it's probably got the same sort of extension. So this is what I like to do, just see what the first leg up, that's your first serious correction. Where does the second leg take? It takes you right into that zone. So there could be more to come on the S&P. We just have to wait and see. I mean, this could pop up, test up towards that resistance. The Dow could go through, wash out a lot of traders. There's going to be some stops loaded up here too. So it's going to be one or two things. They're going to use those stops to trigger a move up, or they're going to wash it out and get them all caught on the wrong side, trap them, and come straight back down again. Germany, same sort of thing. It's just pressing through there now, so we'll have to see how that goes. So we're up on those key levels. FTSE, this is a FTSE, popped up, contraction low. That's looking primed to trade up to those highs as well, 72.19. And then we've got gold. Gold is heading south, so you're going to get that sort of reaction on the open of our session. The Asian session are going to sort of flow on from what happened overnight. And look at this. This played out. This is another. How we planned this yesterday, we drew this up pretty much spike up through these highs and then looking for that lower high entry. It played out beautifully. So it's a good idea. Actually, just go through that. You can see what happened. This market was looking buoyant. Okay, it popped up. You figure if we get up through here, if it's bullish, you want this mild pullback, 1/3 to 2/3 of that move up, hold a higher low, and then go again, take out the highs. It didn't play out. As soon as you come crashing down through a key higher low, which was there, 1538, you can see that push down, you're looking for your lower high because you know that there's enough fuel built up that could easily squeeze out. We didn't get up to the previous high. There's a lot of reasons why if you're looking for a lower high to sell into, and look what happened there. And if you just go and check these sorts of setups, lower highs, what happens? If it accelerates like that, you're not the only one seeing the same thing. So that's why it's a good idea to draw these up, save them, and study them down the track, especially if you're into technicals or if you're trying to learn your technicals. But that played out pretty much like we were expecting, which is not a good thing for the bears. But yeah, that's it. Let's see with the ASX open. Up 43, so pretty much primed where we thought. Just see what. That's not it. I want this, don't I? And so this morning we're looking at this potentially washing out that level. Bit of a washout, which we said before, the market will do it time and time again. It's a key level up at 65.37. This is on the SPY, by the way. You know that if it's up there, there's a good chance it's going to wash it out, even if it's extended. So what we'd be looking for here, it's washed it out, opened up opened up above. What that's done is dragged in some buy stops, cleaned them all out. Markets pulled back on them. They're either behind the 8 ball, they're down, or they're stopped, and they're potentially looking to go short. So from here, plan of attack, this market is definitely up. If we have a deeper correction, hold up above 65.01, and then start to chop around, you'd be looking for something like this. Pull back a higher low. Look at this higher low in here. Oh, this was from yesterday, wasn't it? Where am I? Something like this. That didn't really play out. Maybe something like this. A higher low to play out. Something like that. You've got that press down, especially when you've got some sort of spike lower. Spike lower followed by a higher low is a potentially good setup long, especially when you're with trend. You weren't with trend here, but anywhere after the MA's crossed, you keep bouncing off the MAs. You're bouncing off the MAs. So we could do the same sort of thing, especially if we pull back here and we start chopping around here, then look for that potential press back up towards the close. And if we get up and through 65.37, and depending on what the rest of the markets are doing, it could be a bullish day, it could be a bullish night tonight. So that's the views. For shorts, I would like to see it pop back up from here and chop around below. All right, so shorts is really, if we can draw that, we might come down a bit more, then pop up and start chopping around. So really the reverse. And this is for intraday scalping or your intraday trading more than anything else, but that's what I'd be looking for. A bit of a pullback, holding up above this level, 65.01, seeing buyers stepping at higher levels, something like that, sitting on top of the MAs and looking to expansion. So you're always looking from contraction into expansion. That's the idea. And you're looking for that expansion higher once all the shorts here that are built up through here, anyone that's been shorting it is realizing they got it wrong. You want to try to get it when they start to realize they got it wrong and they're exiting, buying it up. And then you got other people jumping in to go long, and that sort of starts to turn that bias to long from short. That makes sense. And that's what you're looking to trade and take an opportunity like the trade from yesterday. Anyway, so it makes, and the opposite on the, if you get this bit of a pullback, it pops back up. Anyone that might have been buying off there looking to go long, you might see this chopping around the high. They start to realize they're wrong. They're on the wrong side of the market. They want to either get out quick or they're going to, there's different levels. You either get out quick, do a runner, lock in a minimal gain, loss, small gain, or you're stubborn, you hold it because your ego's saying, I'm going to be right, and then they have to close out later, and that could really fuel that move down. All right, guys, that's about it. We'll probably call it a day there, but good luck today. Hope you enjoy your day. It could be a fairly good one. We'll just see what happens. This is what I like to see. This is what I've got long from 3.1 SEI. I want to see if they can get a kick on. Very small one. Excuse me. Yes, have a good day. We'll see what plays out. This is our SM1. We're bringing it stopped out of that soon, but we've taken a partial. Didn't quite work out. Maybe it's not quite working out. We'll just see how that goes. Am I stopped out? No. Oh, I haven't changed that. I've got to change that. Stop's not at 905. It's 8 something. Bought new NCM. Let's have a look then. That's your 1 minute chart, isn't it? Yeah. So this is what you did, Vin. Bought it off this low. You can see these sorts of moves, they can play out quite nicely. I tend to like the 5 minute. If it could pull up short on the 5 minute, so if the 1 minute, if it could pull up, so this is all sort of one move that's retraced on the 5. If we pull up short here and start to head back up, I'll be buying on the break of the high. We'll see how that goes. 36.18. Ooh, you're nearly there, mate. Good luck with it, buddy. All right, everyone have a good day. We'll be back in on Monday. Oh, another thing, what I want to start to do, if anyone's keen, I mean, you don't have to, it doesn't really matter. What I used to do with Davin years ago when I was learning sort of intraday skills or your charting techniques was to send in trades I've done. So what I would do if I'd intraday trading especially, I'd send in what I'd done through the day. Sometimes it could be 2 trades, sometimes it could be 10 trades. When I was starting out, it tended to be on the top end of the trading. So I'd end up doing about 10 trades or something, just probably overdoing it, marking him up on a chart of the session and then sending it off, and he would go through it. As to everyone else, I didn't care. It's always going to help me. It's only going to benefit me to to put it up there. But he would talk through it, what he thought, and that way it would help me learn and it would help me submit because I knew exactly what I was thinking when I was trading. I knew exactly what I was looking for. Right or wrong, I knew how I felt through those trades as well when they were playing out. And hearing Davin, who'd been there, done that, talk about it was for me really beneficial, and it helped out a lot. So if you're keen, if anyone's keen, if anyone's happy, you can chuck in if you can just mark up a chart, you can email it to support@tradesetup.com.au and mark up the chart. If win, lose or draw, um, I'm happy to show you some trades I've done as well, mainly intraday because the other ones are boring. Everyone pretty much knows the stock ones we're doing through the alerts service, but if you want to, I could put up some other trades. Win, lose or draw, I could tell you what I was thinking, and then we'll see how that goes. But if you're happy to do that, just send in your chart and we can go through it Monday. I might get the ball rolling Monday if no one else wants to. I know I've spoken to Lauren; he doesn't mind potentially sending in something. It doesn't have to be a win, but if you only got one trade, that's fine. You can send in a couple if you want, and just to step through it. Not saying I'll be right or wrong, but I can give you my opinion. And if you were wrong, why potentially you're wrong, or if it was a good trade. The best thing Davin actually said to me was on my losses. So there was nothing wrong with that. And when you hear someone say, and you're trying to learn, someone say there's nothing wrong with that entry, I would have taken that. It just didn't work out. When you hear someone say that, it starts to cement in your mind that you're on the right track. You're looking for the right things, all that sort of stuff. And I found that really beneficial. Not so much. And if I did do something stupid, he would say, well, this is probably why you lost. You didn't take into account that. You didn't take into account that. So next time, maybe think about that. And it helped me out quite a bit. So it just started you on the right course. And I think after that, for trading, it's a matter of doing it, repeating it, seeing the results start to tick over and see the consistency starting to tick in. I'll start to enter your trading. And then I think after that, it cements that you're fine. And then you just rinse and repeat. So anyway, guys, we'll call it a day there. Thanks for joining me. Have a great weekend. And we'll go from there. Yeah, no, send it through, Daniel. Bobby, fine, mate. We'll get into it. We can do one in the morning. We'll do some at the 12:30 session, maybe in the afternoon if we run out of things to talk about. We never really do. I don't have a problem talking if you haven't noticed. I spend most of the time during the day by myself. So I like talking. Even if I'm talking to myself half the time, it doesn't matter. All right, guys. Yeah, we'll do that. That'll be good. And I think even the intraday stuff, if no one trades intraday, it's worth looking at to get an idea because these patterns do play out on the day as well. Let's just see if we've got something here. No, see stocks once they go, they just sort of pull back, sit on the MAs, go look for volume. It's a bit of an easier job technically. All right, guys, have a great weekend, and we'll speak to you on Monday. Cheers, bye.